Not at all. In fact, it's interesting that we want Tesla to scale its units because each one now represents the potential for a robo-taxi and a robo-taxi fleet. Since Cathie Wood, the CEO of R Invest, is a known Tesla bull, Air Invest has been a well-known Tesla bull for some time. The company's rationale is straightforward, if a little unconventional. Tesla is not an auto play. Rather, it is an autonomous taxi platform play with software as a service similar margins, in ARK's opinion. Wood stated in one of her interviews that analysts and Tesla bears are currently unable to understand. Tesla should trade like a technology stock rather than like traditional automakers. Wood thinks that Tesla's agreements with other automakers regarding its North American charging standard, or NACSES, bids well for the company and everyone basically. Elon says he might launch the fleet this year, but we think it will be more like last year. The fleet of robo-taxis is going to be, or the robo-taxi service is going to be, from a margin point of view, more like in SaaS business. So we think Tesla was very smart to maximize units because they have so much option value now from a few months ago. An analyst from Cathie Wood, our investment management, saw General Motors' decision to adopt Tesla Inc.'s North American charging standard, unleashing enough momentum to encourage more EV sellers to adopt it. And in newsletter, analyst Sam Corr stated that Tesla's supercharger deployment costs are significantly lower than those of its competitors in key geographic areas, making it a desirable option for businesses that sell electric vehicles. Additionally, by opening its charging network to new users, Tesla is expected to hasten the adoption of EVs and boost the industry's capital efficiency. The analyst said, but we've been hearing about the robo-taxi fleet for some time. There's a lot of regulatory barriers to all of that, and certainly technological barriers involved too. So how soon can we actually see that realized? And given the fact that you tweeted earlier today that you've got an valuation assessment of Tesla coming out, how does that fit into your price target for the stock going forward? The price target for our stock, and I think it's just hitting now for 2027, because we do have a 5-year investment time horizon. Is our expected value is roughly $2, zero, and that's within a range of $1,400 to $2,500 RB and bull case. Now, just Morgan on the regulatory side, I actually think regulations are working in Tesla's phase for, I think, roughly 3 decades. The number of auto fatalities in the United States fell to the low 30,000 range per year, and they've turned around in the last 5 years and moved up to 45, 0 plus. And I think the pressure is on the National Highway and Transportation Safety Association to change something. So it is looking carefully at Tesla's data, now going back to Cathie Wood. Most bullish among Tesla bulls, there have been several updates about the company that she's happy and satisfied with, one of which is the Tesla FSD in an exclusive sit-down with Bazingo CEO Jason Rosnick on the Raz Report, which shed new light on the future of Tesla's FSD program. Mid-June update from CEO Elon Musk. Musk announced in late June that version 12 of FSD will no longer be in beta, implying that Tesla's FSD will be supposedly perfected at the time of release. When Rosnick asked Wood about the implications, Wood replied, well, if you receive the last software update, you'll see how much FSD has improved. Wood's insights provide a nuanced perspective on what could become a game-changing technological advancement for Tesla and the automotive industry. The Tesla CEO need huge language models to complete this last mile of FSD development. She said, adding that the data already shows that driving a Tesla with FSD is 6 times safer than driving a typical automobile. She ascribed Musk's comment to artificial intelligence. Wood's emphasis on security is consistent with ARK's larger investment ethos, which places a higher priority on innovative technologies with the potential to change what's happening, is that some advances in AI are bringing Tesla one step closer to its objective. Wood continued by saying that accidents involving FSD are recorded once per 3.2 million miles, which is a considerable improvement above both Tesla's pre-FSD numbers and the typical human driver. This information forms the basis of Tesla's current safety metrics. Wood also discussed the idea of a network effect for Tesla's fleet, with the company's much-discussed taxi system serving as the backdrop. The founder of R Invest compared Tesla to cruise automation, a driverless Uber technologies rival that General Motors acquired in 2016. And during the investment process, Tesla released some data that we don't think enough people paid attention to. The most significant of these is that with full self-driving technology, Tesla vehicle gets into an accident every 3.2 million miles compared to one every 500,000 miles for average car on the road. It only took 3 months or 90 days for Austin to figure out, which I'm sure is driving Elon even more. One thing Cathie Wood made very apparent at the just ended Florida Automated Vehicle Summit: artificial intelligence and autonomy fueled by electricity will drive technology in the future. In a Tampa onstage interview, Wood discussed her market forecast, the ARC team's analysis of Elon Musk's incidents, and startup guidance. Her main concern during the conversation was the possibility of technology disruptions brought about by innovations such as driverless driving. In the next 5 years, autonomous taxi platforms will bring in $8 to $10 trillion in revenue, according to the speaker. This is in line with the convergence of electric and artificial intelligence in the tech industry, which powers and informs the majority of self-driving cars. In other words, for tech companies to succeed, they must have a low-cost, useful product. She claimed that businesses like Tesla Inc. are successful not just because of their cars, but also because of the software and intelligence they gather. The world's largest AI project over the next 10 to 20 years will be autonomous transportation, according to investors who define Tesla as an automaker rather than a broad-based technology business. The founder and CEO of Wood Arc having enough data to successfully deploy autonomous vehicles on the road could be one of these firms' challenges. If not, they will need to devise novel strategies for gathering unique data that is impossible to recreate through routine driving or simulation in order to be the first to scale widely. Tesla differentiates itself from other self-driving companies because it's collecting millions of miles of driving. It's about every day, she said her appreciation for Musk was another thing brought up at the Summit. Wood talked about speaking with the Tesla CEO on a podcast, which she called thrilling, and shared how they connected after the Tesla CEO shared a call colleagues tweet. The moderator even asked if she would take over Tesla for Musk, pointing at her. She responded adamantly and repeated no during the event. Wood also offered some advice to young entrepreneurs and startups in the audience. She did not mention anyone as Petersburg specifically, where in 2021, she famously moved her firm from New York City individuals who are aiming to be on the software side of autonomous mobility and are well suited for the future. She said, important decision you have to make is to make sure you're on the right side of change, because just like we're talking about in the traditional sector, there's going to be a lot of carnage, she said, referring to the traditional sector of driving and fuel vehicles. Now, the question is, why is Cathie Wood and therefore ARC extremely optimistic about Tesla? Well, the reason behind their stalwart support of Elon Musk's Eve company is simple. Wood stated that although ARC is bullish on Tesla as an AI company, it is more optimistic about the previously mentioned autonomous taxi business, which ARC believes could lead to $1 trillion in revenue by 2030. According to ArcSi's most recent research, which was published in April, Wood expects Tesla to reach $2,000 per share by 2027. This is based on a weighting probability of different outcomes for revenue, profitability, and the stock's expected valuation. But even in ARC's worst case scenario, the company thinks the stock might be worth $1,400. So hold on, Cathie. Good afternoon. This is John Ford. Just to be clear, did you mention a price of $2,000 per share? We believe that the global robo-taxi opportunity will generate $8 to $10 trillion in revenue by 2030, making it one of the most significant investment opportunities of our lifetimes. Target Tesla is currently trading at less than $200 per share. So even if you were to 10x that, that would be an over $5 trillion market cap. Thus, ARC anticipates that the majority of Tesla's profits will come from the self-driving taxi industry by 2027. According to ARC's analysis, Tesla could generate over $1 trillion in revenue by that year, with 44 of that amount coming from autonomous taxis and 47 from electric vehicles. These assumptions are ultimately based on the company's leadership, artificial intelligence, and the data it has gathered to make its self-driving technology superior to human drivers. Energy Solutions would supply the remaining amount. Insurance and ride-hailing services operated by humans. Dan Ives of Wedbush believes that Tesla is a tech powerhouse rather than a car manufacturer, and He recently estimated that the company's supercharger network could generate up to $20 billion in income annually by 2030. Bulls have disruptive technology, and there's still a lot of controversy about the term. I've always considered them to be a tech play, and I can argue that. When you look 3 to 5 years into the future, the FSD aspect makes them one of the strongest AI bets. Subscribe for more.